Rob is the SureVest CEO. Very, very big schmatty pants on these matters. Rob, on technology and where you see it going, a lot of people are hoping this is the week we can claw out of this incredible bear market for technology stocks. A good many of them have bounced well off their lows, but most of them are still well into bear market territory. What do you think happens by the end of this week?
Yeah, I mean, it's a big week, Neil. I mean, if you look at today, we've got Google reporting after the bell. Tomorrow we've got Meta and Facebook. And then Thursday we've got Amazon. So the three horsemen are going to be reporting. And I think it's super important what these companies say because, as you mentioned, Neil, a lot of these stocks have rebounded a bit, but they're still down 25, 30%. Right. And these are the companies that we need to get the market going back up here.
You know, Amazon gets maybe disproportionate attention because it's obviously much more than a technology stock. It's a reflection on retail activity. And I'm wondering, when you hear what Walmart was indicating and fearing and telegraphing, whether that might represent a problem for Amazon and whether that might be sort of like a new kink to deal with.
Yeah, I mean, it's a little bit of a challenge, and you saw Amazon get beat up after hours. That's continuing today after those Walmart numbers. You know, I think it's a tale of two economies, though, Neil, because if you looked at American Express, when they reported last week, the higher-end consumer was doing okay. So we'll have to see what they say. But remember, they're just not a retailer. They have AWS, which is their biggest profit margin, faster growing. So I think it's going to be a little bit better than what people are pricing in here.
You know, with technology, you get a lot of bang for your buck. And Apple, of course, charges top dollar for a lot of its material here. So we'll get another number out of them that might indicate whether, you know, their customer base will still pay top dollar for things. Now, it's not like a McDonald's, which came out with better than expected numbers because it was raising prices and people were, you know, more than willing to pay a little bit more for a burger or a double quarter pounder, preferably with cheese. And they were fine. It's very different, though, when you're buying a top-of-the-line iPad or whatever, isn't it?
Yeah, no, I agree. I think for people that don't need to upgrade in a recession, which we're probably in, more than likely they're not going to. But let's remember also, just like Amazon, they have other levers. So some of their ongoing subscription-based services, I think, are going to be growing. I'm not too worried about Apple, and I think some of that's been priced in terms of a little bit of a slowdown on some of those product purchases.
Would you buy any of these technology names coming out this week at these levels right now, or would you wait out and see what these earnings reports say?
Look, I mean, it's always a risky game to try to play a stock before earnings. I think, you know, Meta and Google, though, which Google reporting today, Meta tomorrow, the valuations right here, I think, are extremely compelling. These two companies long-term are going to be winners. I really think, quite honestly, Google beats today. If you look at American Express, again, travel's up. That's a big part of advertising for Google. Those are two names I think you could buy.
We'll watch closely. Rob, great catching up with you. Rob Luna of SureVest.